Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and we're getting an update today from Calibre Mining, traded on the TSX under the ticker CXB and on the OTCQX under the ticker CXBMF. And we're joined today with the Senior Vice President of Corporate Development and Investor Relations, Ryan King. And Ryan, it's been a little while since we've had you on the show for an update on Calibre, so nice to get an update just for people listening in. This company is operating in Nicaragua, Nevada, and Newfoundland, and they have other properties in Washington and Labrador. So there's a lot of different projects to get into. Obviously, the main emphasis of the company right now is the development of the Valentine Gold Mine in Newfoundland and the stellar operations that we're continuing to see in Nicaragua. You did just put out your Q2 financials, Ryan. So we don't have to get into all the specifics, but maybe give people some of the key takeaways and key metrics from the Q2 financials that you'd like investors to know about the financial strength of Calibre.
Well, good morning, Shad, and thank you for having us back on the show. It's always good to come back and give everybody an update, and we'll try to be here a little bit more frequently, but it's been a busy time indeed, as you've alluded to. Yeah, lots going on, as you mentioned. We started the company back in 2019 by acquiring assets in Central America and in Nicaragua. We've evolved a hub and spoke operating strategy that has worked well. It's actually, we look back, it's provided about a 28-30% year-over-year production growth. I think we're now up to 6 or 7 permits on satellite deposits. We just recently received a permit and started to deliver ore from another new open pit that's located about 5 kilometers away from our Libertad facility. So it's leading to a strong second half of the year, and that was always the plan, to have a significantly stronger second half in H2 versus H1. And actually, if you look back to 2023, it's very similar. I think Q4 was a record quarter for us, almost 75,000 ounces. And I think this year we're looking potentially even higher with the addition of this Volcan material coming into the facility. So the first half of the year, we produced a little over 120,000 ounces. Our all-in sustaining costs come in around $1,500 an ounce, generating strong operating cash flow, as we were talking about before going live here. Expansion is happening with regards to people's costs to where the gold price is. So we're seeing good expansion there, and it's allowing us to continue to invest significantly in exploration. We've talked about this in the past, but Calibre is obviously a growing gold producer and a diversified now gold producer, but we are also reinvesting back into mine development, into exploration, and that's boded well for Calibre, given the 290% reserve growth in Nicaragua, going from 250,000 ounces to a little over 1 million ounces. And now we're sitting at just under 5 grams per ton gold on average for the reserve grades. Equally as well, in Nevada, we have seen the growth there by investing in drill bit, 50% increase in reserves. And we're very excited about the potential in Newfoundland. We started the year off with doing RC infill drilling or grade control drilling into the Leprechaun pit and Marathon pit, and we're seeing some very good positive reconciliation in Leprechaun. We'll be coming out with an update on Marathon here in the next little while, the Marathon pit, and I don't think that is going to disappoint. We've also been advancing what we call a RAB or Winky drill program, this more bedrock geology or host rock identification program that will assist us in identifying new areas along the 32-kilometer long shear zone that we're now exploring. And recently commenced a 100,000 meter diamond drill program across the property. So it's a very exciting time from exploration. So it's strong cash flows have allowed us to reinvest back into the assets. And then, of course, we're developing Valentine. We'll get into that, I'm sure. But, it's a relatively kind of boring quarter for Calibre. We had talked about a 55 to 60,000 ounce quarter. We came in at 58,000 ounces for the quarter, and as mentioned, we expect Q3 and Q4 to be the strongest, but we expect a stronger second half of the year. sitting at about $127 million in US in cash. We've been drawing down our Sprott project facility for the Valentine Gold Mine, and that had at the end of June $125 million in it that we're working through drawing down. So in a strong, solid financial position to continue that build there, and of course we'll talk about that. But yeah, no, all going according to plan, according to Q2 and year-to-date results.
Yeah, nice to see you right in the middle of the range of the guidance for the production. And we definitely will get into the Valentine Gold build and how things are at. But quickly, let's just zoom in on Nicaragua for people listening in before we jump to Newfoundland. In Nicaragua, I think it's substantial what you mentioned about bringing the Volcan open pit in, that pit that's about 5 kilometers away from La Libertad, the mill, because I remember, Brian, when we first started talking about it being a drill target and when it was coming back with high grades, and we were like, wow, look at the grades from Volcan, and now you're producing it again. So maybe just speak to the strength of the hub and spoke model. A lot of people say they're going to do a hub and spoke model, and they get one spoke going and run into problems, and there's no more spokes. You guys have 3 or 4 different spokes going now, and this is yet another success story, just like when we've talked in the past about Pavon Central coming on last year and Eastern Borosi coming on last year. Now you got Volcan on. So maybe just speak to the exploration and the operations in Nicaragua first before we jump to Newfoundland.
Yeah, of course. And it's a central point to our thesis and value proposition is Darren, our Chief Executive Officer, again, just as a quick reminder, 30 years with Newmont, he actually implemented a hub and spoke operating strategy in Nevada with Newmont, but a very seasoned, experienced mining engineer and entrepreneur. So Darren has been working through the strategy over the last number of years, and we're looking forward to expanding that. So we've got the Limon, the smaller mill that is completely full now. It's got 500,000 tons of annual capacity, and we feed that through open pits and underground mines on the Limon property, or we call that the Limon complex. And then because we have excess mining capacity, we started off hauling material from Limon to Libertad. That's about 250 kilometers along good paved Pan American Highway, and using local contractors to do that. And that's what really started to unlock the initial vision for our hub and spoke strategy. So bringing material from Limon to Libertad, these are all low sulfidation epithermal vein systems. So mineralogy is very analogous or similar to each other. So recoveries at both plants sit around 90%. And as you said, Shad, is that we brought on Pavon Norte, Pavon Central, and then Eastern Borosi sequentially over the last few years. And then most recently went through the permitting process for Volcan, got that permitted. So this is I think the competitive advantage here is that Calibre is the largest industrial miner in country. There's not a lot of gunk in the bureaucratical system. They follow international codes of conduct in terms of environment, transparency with regards to local communities and all stakeholders, et cetera. And Calibre makes sure that that's a significant priority for us to ensure that we do that to those international codes of conduct and higher. And so each one of these sites requires a full EA, full community engagement. And in each one of these processes, we've gone from permit through to plant, bringing material into one of these facilities in approximately 12 to 18 months. So it's very effective. We do it very responsibly. We engage with all levels of government, local to federal, all levels of stakeholders being the communities in which we operate, and that's the highest priority for us. So we've now got a solid reputation within the country to be able to do this to these levels of standards. We also employ locally from these different communities, so I think that has a very positive impact overall as well. So with the latest Volcan, that was part of our plan for 2024, bringing that material into the Libertad facility, and keeping in mind that the advantage here, or the opportunity, I should say, is that Libertad has 1 million tons of available, paid for surplus capacity that we will be utilizing. So I talked a little bit about exploration. We've had some great exploration success over the last few years. We talked about it. We discovered Volcan, and it's not huge. It's probably 150, 200,000 ounces in resource now, and I can't remember exactly what in reserve. But the opportunity here is that we can discover 200, 300, or 500,000 ounces of resources and responsibly, safely go through all of the processes and then bring these into either one of these facilities economically as well. As we've demonstrated, we now haul material up to 400 kilometers away from one of these facilities. So a very significant logistics program that we've got in place, very sophisticated. It's really evolved over the years as well. Significant driver training, significantly equipped vehicles with cameras, governors, GPS units, etc., to manage the fleets. And obviously, that's incredibly important from a health and safety perspective. But yeah, no, it's worked out well for us. And right now, we actually have 13 rigs operating in Nicaragua. And the reason that is, as we said, we've got surplus capacity. We're building resources. We're building reserves for a brighter future and a more sustainable future for the assets. And we think there's tremendous exploration upside. We've actually got a significant mineral concession package within the country. I think we're probably somewhere around 12 to 14% of the landmass of Nicaragua under mineral concession via Calibre companies. So we see great potential there. We know that the perception is more challenging for investors to look at Nicaragua as a place to operate. But if you look at Calibre and what we've been able to do, demonstrated ability to deliver, we find it to be a fantastic place to operate.
Yeah, Ryan, I think that a lot of the concern from investors is maybe just that they don't understand how quick it is to permit things, how quick it is to get things moving. If you think about how fast, like you're saying, 12 to 18 months to turn something from, exploration targets into development and into a pit that's now producing and trucking ore over to your mill, that's amazing. If you put that on a Canadian or US timeline, it would be 5 years, maybe 10 years on some of these projects. So I think Nicaragua offers some opportunities that are maybe unrecognized by investors. And that's the proof's in the pudding. You've done this year after year where you've expanded not just the production profile, but you've explored and found higher grade deposits and raised your overall grade profile. And to your point, 13 drill rigs in Nicaragua, good Lord, we talk to exploration companies that their whole thing is exploration. They have one or two or maybe three rigs, 13 rigs. You got a lot of exploration going on. So if people want to invest in exploration, it's nice to have a producing asset to help bankroll that. But let's talk about the exploration you're doing over at the Valentine Gold Project and the development work going on in Newfoundland. You guys are doing a lot of drilling there too. Walk us through some of the recent, I guess, success since we've talked last with the drill bit, but also how things are going as far as the development at the Valentine Gold Project.
Sure, sure. No, of course. And you're right. Chad, fortunately, we've got some good people working with us. Darren's experience goes a long way. So it's fortunate. We've had a rising gold market environment over the last few years. We have had our heads down and working on delivering. So it's now paying off. It's providing that cash flow to allow us to reinvest into exploration. So we're fortunate to be able to be in this position to, as you said, bankroll our exploration. And it's very exciting opportunity for us to have these rigs, this amount of activity that is going on. It's tremendous. And I think it's very beneficial to the communities. It's very beneficial to the region as well. So when it comes to Valentine, yeah, so just quick reminder here, we diversified the portfolio by announcing the acquisition of Marathon Gold in Q4 of 2023. So quite recently, we closed the deal in January of this year. And I think at the time, the construction of the project was approximately 50%. And I think at the time, the detailed engineering was at approximately 60%. So we've come a long ways in a short period of time. And again, I lend that to Darren's experience and a gentleman by the name of Juan Becerra's experience and the team's experience there, being that both from Newmont, both have brought a significant amount of builds, operations, working with suppliers, contractors, et cetera, in many different jurisdictions around the world. So being able to, lend a hand and bring in very qualified people to assist with this. Obviously, why this worked out so well is that Marathon had a need and Calibre actually had a need as well. Marathon's need was capital, and fortunately, Calibre was able to bring operating cash flow. Also, at the time, we had essentially no debt and about $100 million of cash. So we were able to, that was really the need with the Marathon progress. Calibre's need was to diversify the portfolio to unlock additional value for our shareholders. And I really believe we're starting to see that happen. And I think there's a lot of upside from here. But yeah, so that closed in January and we're well advanced, but pretty much all of the operational leadership team is now in place. So that's a significant milestone. We were not 100% sure how well that would go, but we've really attracted some fantastic people in to operate the Valentine mine. And look, we're approximately a year before first gold. I think we've been telling the market Q2 of 2025 will be at first gold. So Jason Sear, he is the VP Operations for Canada, a very experienced operator. Andre Morneau, process plant manager. So we've brought in some really, really good people to manage Daniel Saunders in terms of the operations, mine operations. So we've got a great team in place. Now, we've also employed a team called Reliable Controls Corporation out of Salt Lake City, Utah. This is a group that comes in and does pre-commissioning and planning to integrate the ops with the construction, with the operation. So I think that's going to dovetail very well. It's not a typical step or group that you would bring in for an operation of this size. Larger companies, Newmont's, Barrick's would do this. But given Darren's experience in setting up these processes, I think it makes really good sense for us to be able to be on time, be on budget, but also deliver upon expectations. So yeah, as of the end of July, we were about 77% through construction completion. We're now at 99% detailed engineering, and that's really important because it really lays the foundation for the understanding of the capital cost to deliver this. And we came up with a capital update in May, which resulted in capital going from roughly 510 million Canadian to our rebaselined update in May resulted in a capital cost of 653 million. And the reason, Shad, is we've brought some items forward from phase 2 into phase 1. But importantly, there was a number of items that had some underestimation that I think in the end will result in a very efficient, effective operation in Newfoundland at the Valentine Gold Mine. So it's exciting to see how this is all coming together. On-site assay lab is now constructed and complete. Structural, mechanical, piping, electrical, and instrumentation is well advanced. All of the mills and motors are on site. And in fact, SAG mill, ball mill, and primary crusher installation is happening. The tailings management facility starter dam embankment is complete. We're, I think, well over 50-60% in the liner. Not only 90+% done on the embankment, but through the whole flats area as well. So some great progress. We've got some great images within presentations and on the website. But yeah, no, it's very exciting to see this come together. And as we anticipate first gold by Q2 of 2025, we're on budget and on track for that. So very exciting to see the transition here from, let's call it 85% Nicaragua net asset value to probably 55% net asset value out of North America. So a nice diversified asset base. And Valentine's a fantastic opportunity. It not only does it have 2.7 million ounces in reserves and 5 million ounces in all categories of resources, but there's such tremendous exploration upside that we can talk a little bit about, particularly in and around the current existing resources.
Well, let's get into that, Ryan. Let's talk a little bit about the exploration upside. And I definitely appreciate the update on the development timeline and some of the work. And people should go check out the presentations that you have online because, to your point, Ryan, there's a lot of great graphics and photos of all of the equipment arriving on site and some of the updates as to what the site layout looks like. And so you can see visually all the progress that's being made by the team on the ground. But your team's also been busy on the exploration front in Newfoundland. And for people listening in, Ryan, that maybe aren't familiar with this asset, there's a lot of different pits here. And we've not really discussed a lot of them on this show before, but I know some of the big ones you've been working at are the Leprechaun pit, the Marathon pit, Berry, and there's some other targets like Sprite and Frank. So for people that maybe are not familiar with this asset as far as how all the pits tie together, what's the main focus? Where has the main action been with the drilling?
Yeah, it's fair to say those comments with regards to people aren't as familiar with some of this, the pits and stuff. So let me give you a little bit of history, as much history as I'm aware of anyways. And so this is a 3-pit reserve mine plan. This is the Leprechaun pit, which is the furthest south, the Berry pit, which is the middle, and then Marathon pit, which is the further north. And these 3 pits span about 6 kilometers in lateral strike length. What's very exciting about this is a greenfield site. And what's exciting is that it's still very young in terms of its exploration evolution. What I mean by that is that, from my understanding, is that the Leprechaun deposit was first discovered in roughly 2011, 2010 timeframe. And actually a gentleman that is our manager of exploration on site, Nick Capps, was significantly involved in the discovery of that. It's about 1 million ounces of reserves. Okay, now the team at Marathon continued on, and then I believe there was some outcrop at the Marathon pit, and that was discovered, I think, around 2015, 2016. So now 2-pit mine plan. They actually went ahead with permitting that and doing a feasibility study. And then it was in 2019, 2020 that they discovered another deposit called Berry, which is in between the two. And actually, it's underneath what we call a bog. So a little bit of water on surface. You could probably wade through it with some high boots, but nonetheless, it was undercover, basically. So that gave the geological team an interpretation or an understanding that these deposits don't just outcrop. So what's exciting now is that this is about 6 kilometers of a 32-kilometer identified shear system. And there's been very, very little exploration to the north in terms of diamond drilling across that shear system. There's been a little bit to the south of Leprechaun, and you mentioned it, the Frank zone. So in the Frank zone, my understanding is there's probably about 25 or 30 drill holes, and there's probably a mineral inventory of somewhere between 200 and 500,000 ounces there. Now, I couldn't tell you any levels of economics around it, but there's an inventory there of something. So it tells you that there's good potential to the south, because not only that, but there's some visual gold in some of that core. There was some visual gold on surface. There's showings across the whole property from a geophysical perspective. Chad, there's also a parallel shear system. So the shear system is really the confluence of 2 plates kind of opening up or breaking apart to provide the plumbing for fluids to flow through it, and then in some cases gold or copper or silver to form, and in this case it's gold, has been forming in this shear. This is the main kind of conduct that will allow the fluids to flow. And then there's a particular host rock, which is called quartz tourmaline pyrite, or that's the host rock where the gold is being discovered. We see QTP, or quartz tourmaline pyrite, across the whole property, as did others that were exploring on this property. So it gives you an indication that we're maybe very early in the evolution of this deposit. And I'll point to other shear systems like the Abitibi, Timmins, the Porcupine Dester Fault, or in Val d'Or, the Cadillac faults in different areas where there've been exploration ongoing for decades and decades, maybe plus 100 years, where deposits along these types of systems maybe range from 20 to 50 to plus 50 million ounces of gold. And analogous to Valentine's geology is Sigma-Lamaque in Quebec, which I believe has produced well over 10 million ounces of gold and quite deep as well. So these are orogenic gold deposits that can go very, very deep. And right now, I think one of the deepest holes is only about 600 meters, and that was underneath the Marathon pit, and it intercepted gold. I believe the intercept was 150 grams per ton gold over 4 meters. So giving us great indication that obviously it's got depth potential, it's got strike potential, and that's the reason why, we're doing infill drilling at the pits to give us a better understanding. And actually, through that infill drilling, we discovered a zone outside of reserves in the Leprechaun pit. I think the intercept was 46 grams over 5 meters, 17 grams over 7 meters. So right at the edge of the southwest portion of the pit on that shear zone, giving us an indication that, hey, this is open outside of the pit and beyond. And, we drilled 5 to 10 holes. And in those 5 to 10 holes, we hit mineralization outside of the pit. I think one of the better holes in the first couple of drill intercepts was 2.5 or 2.3 grams over 12 meters, 2 grams over 18 meters just outside the pit. So, and that area from Leprechaun, if you can think about this visually, Leprechaun pit along the shear to the Frank zone, there's been almost, other than what we've just talked about, there's been no drilling in that area, providing a tremendous opportunity, a tremendous target for us to see what could fill in that area. And geologically, geochemically, and geophysically looks very prospective. So right near where the resources are is plenty of opportunity. So no, I think, when you put it all together and you look at the multiple shear systems, the geochemical signatures, we've got an area now that we're testing that's about 800 meters off of the shear actually, that has got hundreds of grams per ton gold on surface in rock samples. So it's incredibly encouraging to see that this is a greenfield site. It hasn't been explored much, and it's got vast exploration potential when you put it against other geological systems of similar ilk in different parts of Canada. So yeah, I think it's going to be a tremendously exciting time. I think we're going to have a lot of news, not only with the development and the progress of building the mine, which will be the largest mine in Atlantic Canada, but with the exploration potential as well. In fact, it's getting very hard, Chad, to find a plus 5 million ounce gold deposit in Canada in one of the top jurisdictions. So you never know. We may become a target for, depending on how things evolve and develop and evolve with the exploration. It could be a very exciting time for Calibre and our shareholders.
Well, Ryan, I think it's fair to say there's going to be a ton of drilling news out of both Newfoundland and in Nicaragua, and there's still drilling going on in Nevada. So you're operating in multiple jurisdictions. You've got a ton of exploration going on for a producing company. So for people that like a mix of production and exploration, Calibre has it going on. I'm sure we'll be talking again as all this news is coming out. But just wrap us up with a final comment, Ryan, on the value proposition as far as the production profile, what it means to have 55% of the weighting in North America now, and what it means to move really from kind of the small category into the mid-tier category as a producer as far as the valuation metrics. How could this affect the re-rating potential?
Yeah, that's a great question, Chad. I'd like to be able to give you a crystal clear answer. Always difficult to do, but look, I'm going to take a step back and I'm going to, let's look at the bigger picture for a second. I believe we're into a gold bull market. If you look out over the last several years, gold has performed quite well. In 2019, gold was approximately $1,200 an ounce. We're sitting at $2,490 at the moment, $2,490 US an ounce of gold. We're hitting all-time highs, record highs on a fairly frequent, regular basis these days, it would seem. And why is that? I mean, the macro landscape seems pretty uncertain and volatile. Gold has risen in the face of a stronger US dollar and higher interest rates. When historically, when we look at those relationships, gold would typically go down. Now we're entering into a period where we very likely, I mean, based on the rhetoric we've heard from various central banks, is that we will likely see an easing period, lower rates, potentially a weaker dollar. And I believe even various Democrats and Republicans have even said that would benefit the economy to have a weaker dollar. So I think we're entering into a period now where that could be positive for gold. Now, you never know, but definitely the thesis is sort of indicating that and playing out to that. And so when you couple that with Calibre or other gold producers, but let's use Calibre because that's what we're talking about here. As an example, Calibre is now 275 to 300,000 ounces is our production guidance for the year. All-in sustaining cost guidance was 1275 to 1375 for the year. And when you factor all of that in, margins are expanding. We're going to see probably a 60% increase plus in terms of our production profile with the inclusion of Valentine, which would be online in Q2 of 2025. So that should have a positive impact on our all-in sustaining cost on a consolidated basis, given that the all-in sustaining cost based on the 2022 feasibility study of Valentine was $1,000 an ounce for the first 12 years of the mine life. I think it's going to have a positive impact. So we're going to see margin expansion, production expansion in a positive macro environment for gold. And I believe gold equities are not trading anywhere near historical averages. So I think it's starting to get closer and closer, but we're not anywhere near where we probably should be across the board. I'm not just talking Calibre, I'm talking all gold equities are not trading there yet. So I think the longer it stays here, the better it does for the businesses and the balance sheets are in better shape than they've ever been. But yeah, no, it's exciting to see. And then you layer on exploration on top of that. And I truly believe that with those things that I've just mentioned, we should see a continual re-rate. We've recently seen IM Gold re-rate because they've delivered Côté, and that's really started to shine. So I think upon the development and successful production of Valentine, we'll see that. But along the way, we've got a lot of milestones coming up here. So it's going to be good to see those milestones reached in this environment.
Well, Ryan, we'll wrap it up there. But yeah, it's an exciting macro environment. It's an exciting development stage environment for you. And to your point, a lot of these larger companies, when they finally had their bigger mines come online, they also got a re-rating. But it's just going to be nice to see your production profile growing while the reserves and the resources are growing because of more drilling focus, more exploration focus. So there's just going to be a lot of news flow. And if people listening in want to follow along with the news, definitely click on the link below this interview. It takes you right over to the Calibre website, straight to their news section, so you too can follow along, because there's going to be a flurry of updates. And Ryan, keep us posted as more updates come out. We'll get you back on for an update. And looking forward to our next conversation.
Excellent. Looking forward to it, Chad. Thank you.